Are you looking to grow revenues, increase profitability, or obtain financing? If so, you came to the right place.
Running a business is all about leadership. How do you become a better leader? Learn from the successful entrepreneurs and business owners how to lead your organization more effectively. That's why we created Leadership Live at 8:05, Talking Small Business, to help you succeed with your host, Andrew Frazier, Business Growth Pro and CFO and founder of the Small Business Pro University. Every Tuesday evening at 8 p.m. Eastern, we're joined by experienced entrepreneurs and business owners who share their secrets to success via live stream. Also, every Friday morning, we release a new podcast episode. Either way, you will learn about developing your business leadership skills from our roster of highly performing guest experts. Leadership Live is one of the many valuable resources provided through the Small Business Pro University, empowering business owners to learn, profit, and grow. Find out more at sbprou.com.
Good evening and welcome back to Leadership Live at 8:05. I'm your host, Andrew Frazier. Thanks for hanging out with us again this evening. As you know, Small Business Pro University focuses on helping people to sell more, maximize profit, and finance growth. Of course, the first part is selling more, because if you're not selling, you're not really going to stay in business that long. And to really once you're able to sell. So most of our shows are about selling more. But tonight, we're going to take another focus and we're going to talk a little bit about maximizing profit as well as financing growth. Tonight, we got a great subject. I'm really looking forward to it. We're going to be talking about not letting your cash flow problems sink your business. Many times businesses run out of cash, and that's really why they fail. So, understanding how to manage your cash and make sure your cash flow is right is critical. So we're going to talk a little bit about that, but also your cash flow drives your fundability. So, really those two go hand in hand, and to manage your cash flow, many times you need financing. So we're going to talk about these important topics this evening, and excited to have you here joining in. Welcome, everybody. Good evening, Darren. Good evening as well from Florida, and just, appreciate everybody joining in. As we go, we'll have more people joining in. But tonight, my guest is Karl Maier, and he's worked with a lot of businesses in terms of, cash flow, in terms of financial management, in terms of raising capital. So he has a lot of expertise in that area. And, I'm excited that we'll be able to learn from him tonight. So let me bring him on. Hey, Karl, how you doing tonight?
Hey, Andrew, doing great.
Excellent. Well, thanks for taking the time to join us and share your knowledge and expertise.
Absolutely. Looking forward to it.
Excellent. So before we get started, we know each other, but the audience doesn't know you. So maybe take a minute or a couple minutes to sort of talk a little bit about, what's your journey, how did you get to where you are now, and what are some of the key milestones along the way?
Yeah, absolutely. That'd be fun to kind of share a little bit. Started with economics in college and got my MBA. Started with doing consulting with one of the big accounting firms. Did some interesting stuff there. Got hired away by a client, which was a big bank that eventually became part of Chase Bank, and spent some time in the corporate world. So that was very educational. At some point, my parents went and twisted my arm till I joined the family business. So I became the CFO of the family business. It was industrial pipes and valves, distributing these industrial products. So got to do that. We were selling across the country and a lot internationally as well. So got to get exposed to international business. And I came on and helped my parents grow the business. We grew it 5x in 3 years. So we had a really great growth spurt. Financing that growth was a challenge. When you grow rapidly, it uses a lot of cash. So that was a challenge. Building inventory. We expanded to multiple locations. So very educational, building the computer systems, the internal processes. So a lot of kind of getting the basics of running a lower middle market company. Took that. After a while, time to move on from the family business. Dad said, we don't need to grow it anymore. So I had big vision. So I went on, did some entrepreneurial things, eventually started doing fractional CFO type work for other companies, little detour into investment banking that ended in 2008. And that, I don't know if anybody remembers, there's a little downturn in 2008. So, but after that, went back to CFO work and took a full-time position, CFO, helped a company. It was in the health safety type of world, and it was operating exclusively internationally. And we grew that company 7x in 4 years. Sales 7 times larger at the end of year 4 where they were from the beginning in year 1. So that was a fantastic ride. And unfortunately, the CEO owner got sick, like never ever come back into work sick. And so another family member took over. Let's just say it didn't go as well. So I moved on. And basically, I've been doing fractional CFO work since then, either through a group or now for quite a number of years on my own. And I've worked with companies from small startups to medium-sized companies to private equity and family office-backed companies. So good variety, helped them buy companies, sell companies, finance growth, manage the growth. So very financial focus, but adapt to the various situations. So hopefully that gives you a little flavor of where I'm coming from.
All right. So you got like tremendous experience, across different types of businesses, across different types of industries, and really in terms of scaling and growing. So I think there's going to be a lot of different things that we can share that will be extremely valuable to people. So definitely look forward to getting into that. Before we go too far, what I'd like to do is we do this show through the Small Business Pro University. So what is the Small Business Pro University? So here's a short video on the Small Business Pro University, and then we'll be back talking small business with Karl Maier. Many small businesses experience low or no revenue growth, and the owners are not making enough money. I founded Small Business Pro University to help you break that cycle by empowering you with greater knowledge and enhanced skills to lead your organization more effectively. Over the past 15 years, I've collaborated with organizations like the Small Business Development Center, Rising Tide Capital, Empower the Village, NJMEP, Rutgers University, and SCORE to work one-on-one with over 1,000 business owners and teach tens of thousands of people about business. My experience includes serving as a naval officer, managing businesses, graduating from MIT, earning an MBA from NYU, and achieving the CFA designation, which has prepared me to accomplish my mission of helping 1 million and 8 business owners to sell more, maximize profit, and finance growth by 2028. My vision is to create the ultimate business ecosystem for entrepreneurs. Small Business Pro University empowers entrepreneurs like you to run their businesses more professionally and create sustainable enterprises. We employ my proven proprietary Masterpreneur playbook framework to guide your journey along the Masterpreneur path and facilitate your Masterpreneur evolution to work on your business and scale faster, and easier. Small Business Pro University provides access to valuable resources, partnerships, and relationships that will help you to sell more, maximize profit, and finance growth. Our Masterpreneur initiatives include the Small Business Pro Network, 100 plus expert-led multimedia courses, intensive training workshops, Spanish language training, Leadership Live at 8:05 live stream and podcast, in-person Power Breakfast events, and advisory coaching, consulting, and training services. All right, welcome back. I'm here with Karl Maier talking small business. Our topic tonight is don't let cash flow problems sink your business. One of the things that they say is you can go out of business just as fast, by just as quickly or easily as by growing too much as not selling enough. Has that been what you've seen, and why is that?
That's a great way to think of it. It's very much what I've seen. In fact, I know a banker who is quoted a statistic, and I can't remember where he got it from, but over half of the businesses that fail had record sales within 12 months when they went out of business. That's surprising statistic. There's very small businesses that just never get off the ground, never sell. But once you start growing your business, most companies, most traditional companies, they sell something and they, if it's a product or even a service, you send an invoice and you don't always get paid right away. So you have to wait for that money. And so you're effectively, as a business owner, loaning money out, and that takes money. So you've got to pay your employees, you've got to buy things long before you get paid by your customers. And so you can get upside down. And so the natural instinct is, well, I'm short on cash, I need to sell more. But what happens is, as you sell more, you're actually using more cash. And so that's a trap that a lot of entrepreneurs get caught in. And many of them, it takes them down. They grow and they've had this great success and there's demand for their product, but they just run out of money, and then they can't pay a key supplier, they get cut off, employee quits. So it can be a really frustrating situation.
Definitely. So, it can be a challenge. So, when you work with businesses because of that, what do you do, or how do you help them to avoid that situation?
Right. It's an educational process, right? It's helping people understand, what the challenge they're facing. And every business is a little different, of course. One of the tools that I like to use is just a weekly cash flow forecast. And it's a way to help companies see, 4, 5, 6, in some cases, 12 weeks out into the future of how much cash they're going to have at the end of each week. That alone isn't the whole solution, but it's like your radar. If you're flying a plane, you can see what's out ahead of you. And so if you can see what's out ahead of you, then you can make an adjustment. So if you say, wow, I'm going to run out of cash in 3 weeks, well, maybe you can call one of your vendors and say, hey, I'm going to be short in about 3 weeks. I'm supposed to pay you a big invoice. Do you think it'd be possible for me to push that back a week or two? And if you call up ahead of time and you ask that, you'd be surprised how often the vendor will say, hey, you've been a good customer. Yeah, thanks for the heads up. We can handle that. And it's that type of looking ahead and adjusting to what's coming that's so powerful for a company to avoid some of these cash flow challenges.
Okay, you mentioned an important concept: looking ahead, being forward-looking, being proactive. What percentage of companies do you run into that are actually doing that before they come work with you?
Wow, that's a small number. That's a small number. I'd have to think long and hard to think of an example of one that was doing that before I started working with them. So, um, it's a fairly common tool, but not many people are trained in that tool. It's not part of, hey, I'm starting a business. Oh, well, here's, your corporation or your LLC, and here's how to do a 12-week cash flow forecast. It's just not something that you typically know.
No, definitely, definitely. And one of my friends' business partners, he's a CPA, and he says that I always bash accountants. So, but what I have found is most accountants don't even do that for their clients, or maybe don't even know how to do that for the clients. I don't know if you run into that as well.
Yeah. Well, a very traditional accountant. I've held a CPA. I held a CPA for 30 years. I've resigned it because I'm really CFO focused. But most CPAs are really focused on looking backwards. That's what they're trained to do in their accounting profession, and they're going to help you with your taxes, and that's fantastic. And they might even help you give some ideas on saving money on your taxes, which can be forward looking. But the rear view mirror is where most accountants live. That's okay.
Yeah, no, definitely. You do fractional CFO, I do outsource CFO. But I'm a finance CFO. I didn't go the accounting route. So, don't, but, accounting, finance is sort of taking your accounting and looking forward. And I think that many businesses don't get the advice they need to on that, because they assume that they have all the expertise that they need in financial management, and many times that's not the case.
That's my experience as well.
Yeah. So definitely. So we talked about cash flow. We got a couple questions. I'm gonna roll them into sort of one: how could startups manage cash flow with limited resources? In addition, we've got where is it? What's the number one cash flow mistake that businesses make? And even this one, sort of, how do you balance growth with financial stability? And you need cash flow for the stability. So let's talk about, what's the number one mistake or reason for cash flow issues?
I would say not looking forward enough is probably the biggest one. The most common kind of entrepreneurs' cash flow management is, how much money do I have in the bank today? And just kind of keeping in your head, do I have any big bills that are due, this week or coming up soon? And I've definitely seen people that become very good at kind of keeping track. Well, I bought that, maybe, you sell trucks. I bought that truck, and I'm going to have to pay for that in 3 weeks. How much cash do I have? How am I going to build up that much cash? In fact, I saw a guy who sold 18-wheelers in a small dealership that sold 18-wheelers, and he got really good at that method of cash management. It was very impressive. And, he had a multi-million-dollar business. And at some point he'd made a lot of money, invested in real estate, had lots of houses. And he had his son in the business and said, hey, you run it. I'm going to go jaunt around the world, enjoy my life. And you've been in the business for, 15 years or whatever. You can run it. And about 9 months later, the company was out of cash because they hadn't set up systems to help manage the cash, and they had lost that expertise that the owner had built up over 40 years of, this is how I run the business in my head, and he wasn't able to pass that along. So, that's the kind of, you can run it by seat of your pants, and at a certain stage that works well, but at another stage that may not serve you well. So I found it to be a fascinating story.
Okay. No, I mean, definitely. And actually, one thing that I've found is there's really a path that businesses take. And at each stage in the path, there's different challenges. So I'm just going to walk you through the Masterpreneur journey that I've outlined for people. So, it's really 5 key steps from startup to scaling. Going from working on the concept of your business, working in your business, working on your business, working on the future of your business, and scaling your business. And each step, there's a certain goal you have to have, as well as a certain challenge you have to overcome. But not only that, you have to evolve as a business owner to be able to lead your business through each step. And at each step, it requires a different skill or different primary skill. And also it requires a certain level of structure within your organization. So, what we're talking about here is probably more going from step 3, 4, and 5. So you're already in business, you're already making sales, you already got some employees. You're working on the future of your business, and you're working to scale your business. And one of the biggest problems with scaling your business is, like you said, if you're growing, it takes cash rather than gives you cash. And it's going to take cash every month that you grow, and it's not going to stop until you stop growing with most businesses. I worked with a manufacturing company, and the owner was like, they brought me in because the owner was like mad because every month her accountant would say, oh, this negative cash flow is going to turn around, and it didn't. So every month she had to put more and more money in, even though the sales were going up. And she was like, I can't keep doing this. Why is this happening? So you talked a little bit about why it's happening, but what other things drive that situation?
Well, of course, growing as you grow, almost all businesses take more cash. It takes more capital to grow that business. Interestingly, I've done some turnaround work, got my turnaround certification at one point, and helped companies that got in trouble where they got upside down with their bank, or owing too much to their vendors. And so helping them to get out of that situation, one of the first things you have to do is help them reduce their growth. Say, okay, we can't grow at this point. And that is so kind of unexpected. It's not the normal thing that they've been trying to do. They're trying to grow their way out of the situation. So what we're going to try and do is shrink your way to profitability in that type of situation. Now, the key is to not get in that situation, which again kind of comes back to understanding where that cash is going to come from. And operations is one place cash comes from. You're profitable, you generate income, and you can actually mathematically calculate your maximum rate of growth. If you know your margins and your sales, you can figure out how fast you can grow without bringing in, borrowing money or getting an investor or putting more of your own money into the company. So understanding that is part of it. And then kind of going to your finance background. I've also got a lot of strong finance background with helping companies to bring in, debt or equity capital, investors. So knowing when it makes sense to bring in, borrow money, borrowing money is expensive. You have to pay that interest, and maybe you've got fixed payments. but thinking about how you do that, I'm sure you've got a lot of experience with that too, Andrew. So I think that's a really interesting topic for us to explore.
Okay, no, definitely. Financing growth is key. Um, the cash flow management. If you're going to run into cash flow issues, you have to manage your cash flow. Actually, with that company, I was managing on a weekly basis, and basically they were like, "Who are we going to pay, and who aren't we paying this week?" um, and what I try and use, you probably do as well, is AR, AP, and inventory, because it's sort of an equation. You've got AR, which is accounts receivable, AP is accounts payable, and inventory, and all those are levers that you can use to manage cash. So, how do you help people understand these, and how do you use these, if this is what you use, or are there other levers that you use as far as managing cash flow when people are getting into trouble?
Right. No, that's a fantastic point. And if you kind of put those pieces together, if you say, okay, I've got to buy raw materials. And so, okay, I buy it. So then maybe I've got a little while before I have to pay for it. So that's my AP. So that kind of gives me a buffer, but then it's in inventory for a while. How long is it in inventory? And do I have to do anything to it to make it ready to sell? And then I sell it, and then it's in accounts receivable. If you kind of string those together in the right way, you can see what your cash cycle is from when you first start putting money out to when you get money back. And that's a really interesting thing to say. Maybe I've got 120-day cash cycle from the time I've got to put money out, put it into inventory, sits in inventory for a while, then it sells, and then I have to wait 30 days to collect the money. And so that concept, I think, is pretty straightforward for people to kind of grasp. We kind of draw that out on a piece of paper or on a screen these days, I guess. But understanding how long it is before you get your money back helps you think about, wow, yeah, if I double sales, I've got twice as much money sitting out there. There you go.
Yes. So no, definitely, cash flight cycle is real important, and most people don't even think of it. They just buy stuff and sell stuff, and but when you get to a certain size, you got to run your business by the numbers. You can't not run it by the numbers. And
Yep.
one of the key things to being able to run it by the numbers is setting up key performance indicators, or key KPIs.
Right.
So can you talk a little bit about KPIs, and what are some of the key KPIs that most businesses should probably be looking at?
Absolutely. Absolutely. I remember one company was a trucking company that I worked with for a little while. And, they had a number of trucks and different drivers. And, it was a decent sized business. It was supporting a family. But the way they ran it was, man, they didn't use financial statements. They didn't reconcile bank statements. They didn't have any KPIs. They just said, hey, we sold this run, we do the work, and we collect the money, and that's it. And that's their cycle. It was a simple business, and that worked great up to a certain point, but they were never able to grow it to that next point because, to your point, Andrew, they didn't put in kind of the financial management pieces to move it up to kind of stage 3, 4, and 5 of your stairs. And so one of the key things that I think, is your profit margin, keeping track of, if I'm going to sell it for $100, does it cost me $60 or $80? How much does it actually cost me to provide that product or service. So that profit margin, is pretty easy to calculate. That's a good one to keep your eye on. Also, how long it takes you on average to collect your receivables is a really important one. A lot of entrepreneurs are very well aware of, hey, I need to collect those receivables. But sometimes I've seen them where people just don't pay much attention to that. They're paying more attention to just sales. The grow the sales and everything else will be fixed. And that is a good strategy when you're just starting out, hey, up to a certain point doing the sales. But as you get bigger, we need to look at our margins, how much is coming to the bottom line. Is our overhead getting, what's our ratio of overhead? What's my monthly nut, if you will? What do I have to cover each month? And am I covering it? So, but every company is a little different. And as they change over time, you want to keep thinking about what are the numbers that work for me? What are the ones that really tell me how my company's doing? So.
Okay, great. So, definitely your margins, all those things, you have to, calculate. And, what I've found, and even the third chapter of my book, Running Your Small Business Like a Pro, is called What is Your Greatest Fear? And usually, like, numbers and analysis are the greatest fear of most business owners. I'm going to tell them, can you add? Can you subtract? Can you multiply and divide with a calculator? Because that's really all the math you need. And you don't really have to do much division. So it's even easier. So getting people to overcome their fear of numbers and to be able to embrace them. How do you do that? Because I think that they can't ever run their business the way it needs to be run until they do that.
Managing by the numbers, really important. And it is a very common fear. I don't understand all that accounting gobbledygook. I get that. That's you're in the business of working with people, solving people's problems, selling your products and services. The way that I like to do it is, one, to make it visual. So I like to use a lot of charts and lines so you can see what the trends are. And you don't have to focus on, spending a lot of time with the calculator. That's, I'm going to help you set up things so it's real easy to look at it. And nowadays with the software out there, the accounting systems, just QuickBooks and some of the tools you can put to add on with QuickBooks can make it real simple. So you don't even have to get your calculator out. You can just look at the charts and see what's going on. So I think that's a way to make it easier. And QuickBooks is a very common tool, not terribly expensive. So there's a lot of ways to do it without big expense or a lot of stress either. But the other thing is, for most things, for me, if I make it into a routine, if I get up and walk the dog every morning, after a while it just gets to be a habit. It's no big deal. If you get in the habit of, hey, every week I'm going to look at certain numbers, every month I'm going to look at these other numbers, and after a while it becomes so much easier. So building habits makes life easier.
Excellent. And, I think also, when I was in the Navy, one of the things you got to do is you got to inspect what you expect. So many times your bookkeepers and your accountants are doing you a disservice, because they should be telling you what's going on with your numbers and make sure that you're looking at your numbers on a monthly basis and teach you what you should look for, because there's a limited things that you need to look for. You just need to look in your financial statements. And, there's 3 financial statements and each one tells you differently. So, what are those and what should you be looking for from each one?
Right. Your three financial statements, the one that most people think of is the income statement. What are my sales? What were my margins, and what's the bottom line? Did I make money? So that's a really important one. Another very important one is the balance sheet, and that's what assets do I have? Cash, receivables, inventory, and what do I owe? Well, I've got payables, I got a bank note, maybe some taxes, and so that kind of tells you where you are in a point in time. And then your cash flow statement says, where did you get and or spend money? So did you had your profits? Did they come from operations? Did they come from financing? What activities delivered your cash flow? And those are all very valuable standard statements. Every accounting system is going to help you get those statements. But in my view, those are kind of the inputs to my world. So as a CFO, I take those and then turn those into information that you can use to make decisions as a business person. So, and that's where I like the charts and the KPIs, and looking at what your financial statements tell you. That there can be a little bit more to that than just getting your calculator out and adding and subtracting. So it helps to know where to look in there. And I think that's what, Andrew is going to do. That's what, people like we do, is help you take those three financial statements and get insights into how to make your business better.
100%. I'm sure you can, and I know I definitely can. You mean your financial statements, and in 5 minutes, I could tell you things about your business you don't even know.
Right.
But you should know. So, that's how important they are. Like, that's the type of information you have on them. So, but there's only a few things you really have to look for, and you don't. Most of the time, you don't even have to do any math on it. You just look for them, because if, depending on how you get your financial statements out, the math will already be done. Yeah. And so, it's really important to understand that. And, we've got a question that I love, because it's important. Should businesses focus more on profit or cash flow?
Yeah.
And
I bet you have an opinion on this one.
Well, I wrote in my book, and also I wrote an article called Making a Profit But Running Out of Cash. So, cash and profit are two totally separate things, but both of them are really important. If you're not making any money, you're going to have trouble staying in business. And if you run out of cash, you're going to have trouble staying out of business. But you can have one and not the other. And it's important to balance those. And, I think that's where the cash flow issues start, because people focus on profits and don't really think about cash. And, I think also, you've got your P&L, like you said. Most people just focus on the P&L.
Right.
But you got the balance sheet, you got the income, and you got the cash flow statement, which have extremely valuable information on them. Especially, your balance sheet's critical if you're going to get financing. Mm-hmm. So people don't, and I probably at least 50% of the time, most people's balance sheets are wrong. And they don't find that out till they go to try and get financing. Mm-hmm. And I'd say more than 75% of the time, their cash flow statement's wrong. And, so, also it's important to get the right help and make sure your stuff's getting done right. How can you tell when you're looking at the statements, what are some things you should look at, and what are some danger signs?
Yeah, that's a good question. But first, I do want to go back to is cash flow or profit more important? I know a very, very successful business owner, and he always tells people that cash flow is more important than your mother. So it's a very memorable thing. So that's I have to share that perspective that yes, I would absolutely make sure that your cash flow is where you go out of business. You want to be profitable, but you must have cash flow. So where do you look on your financial statements? Your financial statements on your balance sheet, sometimes you've got these, well, basically you should understand what most of the large numbers on your balance sheet are. Cash, you should be able to have a pretty good idea of, is that the cash I had at the end of the month? Yep. Accounts receivable, how much do my customers owe me? Inventory, if you've got equipment, is that on your balance sheet? Those should be the large things in your balance sheet for the most part, for most companies. On the assets. On the liabilities, okay, I owe vendors, I have accounts payable, I owe the bank, or I owe credit card companies. Maybe I have some taxes that, at some point I have to pay. Those might be on your balance sheet. Those should be the large numbers. And so if those aren't the large numbers, if you've got something that you really are like, what is that? That would be a flag to go, maybe I need to talk to somebody, get a CFO or accountant to take a look and see if this doesn't make sense. So that would be my approach. And that also helps you understand your financial statements. And I wouldn't be afraid to ask those CPAs or CFOs that you're working with, what does that mean? What is that number? And if they can't tell you in English, that's something you want to make sure they're explaining it properly, and you've got the right people to explain that for you.
Okay, definitely. So that's extremely important. So we've been talking a lot about cash flow and cash flow challenges, but we're not just here to talk about problems, we're here to talk about solutions. And you talked about being forward looking, and one big problem is people don't get their financing early enough because they don't understand the negative cash flow that's going to start happening. And then you fall behind the 8 ball, and then really bad things happen. So talk about, how that works, what you should be looking at doing as far as financing early. And then, if you miss the boat and are getting jammed up, what are your options there? Mm-hmm. What's the pluses and minuses of each?
Yeah. Well, there's a lot of financing tools out there, and people talk about borrowing money. Well, borrowing money can be done a lot of different ways. I won't go give you a long list, but there's borrowing that makes a lot of sense when you don't need it. That's always the best time to go borrow money, is when you don't need it. Hey, might need it in the future. So if I borrow a little bit now, or if I've got a line of credit lined up, so when I do need it, it's available. So that's one concept that I'd make sure to, think about talking to a banker or a financing person before you're in dire straits, if at all possible. Once you start working with a bank, they may look at the size of your company and your profitability and how, your assets. And they may say, well, there may be ways to help you, but, maybe you're not in the position where you're going to get the least expensive loan. So maybe you have to pay for a more expensive loan. And that, there's kind of traditional bank loans, there's credit cards, there's asset-backed lending, there's factoring. Each of them have a place. And some are real expensive, and people say, well, factoring's terrible because it's so expensive. Well, keep in mind that even factoring, even the highest, most expensive borrowing that you're likely to see is going to be cheaper than the getting an investor, putting even your own capital, putting your own capital at risk. There can be trade-offs there. So paying some interest can make sense. So you really want to think about, if I borrow the money, what can I do with it? So if I pay $50 to the bank for the use of that money, can I make $100 or $200 with that money? Can I do more? Can I grow faster? So it gives you a perspective on what you can do with that money. And it also depends a little bit on your type of business. If you're a service business, you're going to use different tools to borrow than if you have a lot of inventory, if you're a manufacturer or a distribution company. So different companies, it does make sense to use different financing tools. So I think those are some things I'd really think about in those situations.
Yeah, definitely. There's tools available to you. The worse your situation, the less good tools and the more bad tools. And sometimes the medicine is worse than the problem. So you got to be.
That's true. Yeah.
You got to be careful, because you can really you can be in a worse situation from getting financing from the wrong place when you're already in bad shape.
Yeah. I mean, I've seen companies that get kind of in a cycle of, I'm out of cash, so I need to borrow more, so I'm going to pay all that interest. And there's lenders out there that are in the business of taking advantage of that. And you need to be aware, get good advice to help you figure out how to avoid those if possible. And if you get in that situation, help you figure out how to get out. And I've seen it done. You can't, not every situation has a rosy ending, but there are definitely ways. You get the right expertise, you get an Andrew here to help you. There are ways out of these situations.
Yes. I mean, there's definitely ways out. Is it easy? No. Is it fast?
Business easy?
Is it fast? No. Unless you just know somebody who has a whole bunch of money that likes you a lot. So, and the other thing is, many business owners do well and like to minimize their debt. And, of course, that's a good thing at times. But, like you said, when you're growing, you got to prepare. And you're going to most likely need more cash than you think. So it's good to get more than you think you need, get as much as you can at the time. But most business owners only want to get what they think. And how much harder is it to go back for cash later as opposed to earlier?
Right. Yeah. Once you hit a bump in the road, then the bankers are like, I don't know if we should lend to you. It's when things are moving up and looking good. That's when you want to be talking to your bankers, your lenders, and saying, hey, let's work together and help me grow. And so then you've got a relationship. They understand you, especially, if you're working with the type of banker that actually knows you. There's some of these banks where it's really mechanical. It's software that's looking at your credit score and figuring out if you're getting a loan. And frankly, they don't they don't care a whole lot about you. You're just a number, and they can still be a good tool to borrow from. But when you can get a banker that is actually talking to you, understanding your business, and is going to help you when the times get a little tough, that's a really fantastic position to be in. So that's something I definitely encourage you to work towards.
Okay. So not just CPAs, I'm an equal opportunity basher.
Yeah.
So I bash bankers too, because, in different cases, there's a joke that, they'll give you an umbrella when it's a sunny day and then take away when it's raining. So, like you're so much better off dealing with them when the when things are looking good. But also, when you're looking at your growth, you mentioned that sometimes you have to grow slower because you can't sustain it. And one of the reasons is because many times bankers look at the past. So if you're growing beyond your past capacity, they're not going to give you enough to grow. And you said that equity is expensive, but is that a case for equity? And how would you decide whether you need equity, debt, or to just grow slower?
Yeah, that's a really interesting question. I spend a lot of time helping companies with that very decision. If you're growing fast, but you've got a real small margin and you've got this long cash cycle, so it's like, man, I sell $100 and I don't get paid for 90 days and I only make 2%. It's like, wow, that may not be a great business. That's going to be a real problem. On the other hand, if you're like, I sell $100 and I make 90 and I get paid in 3 days, wow, that's a much nicer business. And so, if you've got this new technology and, it's fantastic and you're able to have these huge margins, then it does make sense to grow very quickly. But bankers have these, they like to have their ratios. And if you're growing too fast, that makes them nervous. And so there's like, well, I'm looking backwards. Banker's a little bit like a CPA with money to lend you. They tend to look backwards. Your financial statements say that, based on your recent financial statements, I can lend you $1,000. That's great, but I need 5,000 to take advantage of all these sales opportunities I've got. Okay, that's a situation then where you really need to think about maybe an investor makes sense. Okay, an investor, maybe I'm giving up part of my business. What if I give up, whatever, just pick a number, 10% of my business, but if I'm able to grow it 50%, well, I'd rather have 90% of a business that's, twice as big than 100% of the business that's only, half as big. So, it's really a math problem. And, you can get an Andrew that, understands the finance of it to help you with that math and just say, if you're growing at this rate and you can tell you're going to outgrow the banks. And if you want to take advantage of those sales that are out there and keep growing faster, then you should probably look at investors. So that's kind of the short version, the simple version without getting our calculator out, which I don't think we want to do today.
Okay. Right. So cash flow's, an important challenge when you're scaling, but it's not the only challenge.
Oh,
And but also the cash flow challenge can be, I worked with one company that had like the opposite, because they actually sold their product, got paid for it, before they had to deliver it. So basically, their clients were financing their business. How great is that?
That is great. Yeah, I've seen a couple of those. That you gotta love that. You gotta love
Yeah.
that.
So,
Yeah.
so your cash flow cycle, they basically had a negative cash flow cycle. But
Mhm.
even if you bring your cash flow cycle down 7 days, that can hugely decrease the amount of cash that you need. So that's one thing. But also when you're growing your business, if you don't optimize it first, you haven't solved problems. So then your small problems become big problems.
Right.
And what are some of these problems that you need to optimize and solve for? What should you be trying to put in place before you start to scale?
One of the things that happens when you're growing quickly, another entrepreneur that I knew, man, this guy, when he grew his business and in like 7 years sold it for hundreds of millions of dollars, did a fantastic job. But he would tell me that every time you double your business, everything breaks. And if you think about it, hey, I brought a sale in and I told Susie that, here, take care of this and make sure this, that, and the other gets done. And that's great. But now sales have doubled and we've got more salespeople. And then I don't have one Susie. I've got Susie and Bill. And I told Susie to do this, but I forgot to tell Bill. And then everything got messed up and the customer got upset because this didn't get delivered. And all of a sudden it gets, all out of whack. So as you're scaling, you need a system, you need processes, repeatable business processes. And if you think of, Subway or McDonald's, it's a machine. It's the same thing every time, but that consistency, it's not the excellence as much as it is the consistency. If you are delivering a consistent result to your customers, they know what to expect and they're going to pay you for that. And so that, I think, is a really important thing that is a kind of non-financial. It's not immediately financial. Eventually you'll see it in the financials, but that's a thing you want to watch for, is how am I building repeatable business processes so that I can scale rapidly.
Okay. So so definitely, building the processes. In the steps and in the journey that I talked about, one of the key things is you have to evolve as a leader. And if you don't, you're going to leave your organization, leave holes. And I think you explained that when, the owner left the business and in 9 months, the business was gone. But, one of the things if you don't learn how to run your business by the numbers, then then you're doomed to that, because you can't delegate, you can't leave.
Right.
So how do you fix that situation? What is the key to fixing that situation? Because it's not really a financial situation.
Right.
It's more of a leadership situation.
Yes, leadership definitely, guides you into that process. I think leadership is important. And so having that vision of where we want to go and then building the system to make it happen. And there's systems, there's kind of business operating systems. There's a number of companies out there that have those systems that help you make sure that you're communicating with your team, that you're building processes, that you've got KPIs, that you're checking regularly, communicating with your key people. Those are fantastic systems to implement. They don't need to be expensive to implement. You can obviously get consultants that will charge you, pretty penny to do it, but you can also read the book or get advice from other people in, mastermind groups that help you with those types of things. And those can be fantastic, because the other side of that is, if you don't build those systems and processes, like Andrew was saying, you can't leave the business unless it's really, really hard to sell your business. And at some point, unless you really want to be carried out of the business someday and have it shut down when you're done, some people, maybe that's the answer for them. But most people at some point are like, man, I'd really rather retire, sell the business, cash out, and go travel around for a while. Well, building those systems will massively increase the value of your business, no matter what size it is.
Okay. Well, speaking about what you spoke about, I was working with a manufacturing company on getting financing, and his son was in the business also, and the bank was like, how long do you think you're gonna be around? And he was like, you're gonna have to take me out of here in a box. So, depending on how committed you are to your business,
Yeah.
Some people have that. But when you're when you're developing your team, having KPIs in the system, what that allows to happen is your leadership team to be able to learn how to run the business.
Right. That's
that's basically the leadership role of implementing your KPIs and running your business like a pro, so your team can learn how to run the business and do a better job without needing you there as much. And also you have the numbers to prove that everything's going all right. You're like, everything's going all right, let me go on vacation. Or something's wrong, let me call the manager and put it on them. But yeah, so I think we've covered a lot of great stuff, and an hour's never enough time to do this. But before we close out, I always like to have guests share 3 key takeaways from the show, because most people can't remember more than 3 things. So we simplify it for at least start with these 3. And you may want to watch the show again just to get, because there's so much in the show, but at least take these 3 things with you that you can implement starting tomorrow to make your business and help you be a better leader. So I'm going to give you a minute to sort of think about what you want the 3 things to be, and I'm going to play a short video. Definitely this is something we provide, and something you may want to sign up for to get access to. Will 2025 be your best year ever? My mission is helping 1,000,008 business owners to sell more, maximize profit, and finance growth by 2028. My vision is to create the ultimate business ecosystem for entrepreneurs. Hi, Andrew here with the plan of the week. As everybody knows, failing to plan is planning to fail. And that's why I created the POW. Incorporating the POW into your weekly routine will help you achieve success faster and easier. Each week, we have a different theme in addition to valuable tips from last week's live stream guest expert, online and in-person events that you don't want to miss, the profile of our member of the week, which could be you, and find out about opportunities for grants, contracts, and other resources. Last but not least, test drive our free mini course of the week on Small Business Pro University. Scroll down through the pile for business tips, opportunities, and more event details. I look forward to helping you make 2025 your best year ever. And always remember, the more that you know, the faster your business will grow. Okay, welcome back. Here with Karl Maier, talking small business. We had a great chat about not letting cash flow problems sink your business. So, Karl, what are the 3 key things that people should take away from our discussion tonight?
Excellent. So the first thing is cash flow is more important than your mother. So keep an eye on your cash flow and don't run out of cash. The second thing is every time you double your business, everything breaks. So build those repeatable business systems so that you can scale your business and enjoy your business. And the third thing is that bankers love you when everything's going good. So build the relationship, build the borrowing with your banker while times are good. So when it rains, you'll have the funds that you need to scale your business.
All right. No, excellent. So, first one, but don't tell your mom. Cash flow is more important than her. Number 2, you have to prepare for growth. You can't just let it happen to you. You have to prepare in advance. And number 3, get access to capital before you need it. No, I think this has been, hugely educational. Thank you for sharing your knowledge. And I think just a discussion to help business owners get an understanding and appreciation for what we talked about. Even if you don't fully understand it, at least you know it exists. And I heard something about scaling and there's some things I need to do and cash is an issue. And then but at least, just awareness. And the more you hear, the more you progress in business, you start appreciating those things. But, you got to learn how to do it by the numbers. So, Karl, anything you want to share before we close out?
Hey, Andrew, I've really enjoyed our conversation. I think we do have a lot in common in terms of understanding the numbers and helping companies grow. So it's been a pleasure having this conversation with you. So I hope everybody got a lot out of this.
Okay, excellent. Well, thank you again. If you can, just hang out for a couple minutes and let me just close things out. So, yeah, everybody, always appreciate everybody tuning in. Thanks for joining us tonight. I think we had a great show and, and a great guest. And, this is such an important thing for you to know as a business owner, especially as you grow. So I hope you take a lot away from that. And, each week we have a great guest and looking forward to next week as well. And, next week our guest is Angela Heath, and she's going to talk about how to shine your brilliance in the marketplace. Tonight we talked about really how you maximize profit and how you get financing. But you have to have revenues to have profits. So we're going to go back and just going to talk about some key things that can help you to market and better and sell more. So looking forward to that next week. Everybody saw the plan of the week video that we showed. There's no cost to check out the plan of the week. I put the link in for our website, so you're welcome to join us and check it out, because there is a lot of value for entrepreneurs and business owners. And, finally, at the end of the day, the more that you know, the faster and more successfully your business is going to grow.
Thank you for listening to Leadership Live at 8:05, Talking Small Business. Subscribe to our YouTube channel and to the podcast on your favorite podcast platform. Leadership Live is one of the many valuable resources provided through the Small Business Pro University, empowering business owners to learn, profit, and grow. Find out more at sbpro.u.com.